Lots and lots of stuff to talk about today, but to get things started, let's recap what happened this week on the markets.
Yeah, if we start on the cattle side of the equation, fed cattle prices were down a little more than $1 this week, while on the feeder cattle side, we were actually steady to $6 higher. That August live cattle futures contract was up $1.20 this week, while the August feeder cattle futures contract was up $1.40. Some of that strength, I would say, in feeder cattle had a lot to do with the fact we lost another 6 cents on the current corn futures contract as well this week. The choice box beef price this week was down nearly $5. We had weakness against every component, led by lower ribs and loins, but all components on the beef side were down this week. On the hog side, cash hog prices were virtually unchanged this week, despite some strength through the first 2/3 of the week. We really tailed off here at the end of the week. The current lean hog futures contract was down $3 this week. Again, I think just uncertainty about trade in particular has continued to cause hog futures to tumble this week. The pork cutout value was up nearly $3 this week, and we had strength across the board on the pork cutout components as well. Belly prices were up nearly $10 this week.
Scott, as we take a look at those numbers, really a lot of outside pressure, and for the most part, or for a couple of days at least, the cattle futures were able to hold on and close at least moderately higher, but really just all markets kind of collapsed under that outside pressure. But then this trade uncertainty and these conversations that continue, and it just seems like the hits keep on coming when it comes to agricultural goods in the U.S.
Yeah, we continue to see just a lot of trade uncertainty, and as we talk about additional tariffs being imposed in places like China, it certainly adds to what's already a burdensome domestic supply situation. So we just continue to see a lot of negative when we look at what's been happening in these markets the last few weeks.
Scott, we don't typically talk a lot about the dairy side of things, but as you got into that list from China on the dairy side, I know there's been some struggles there as well. How impactful can those potential tariffs from China on such a large selection of dairy goods impact U.S. producers?
Yeah, so it's not been good when you look at the dairy side. You know, of late, we were going to talk about cheese prices that were $1.60 or so, but given what happened early in the week, we're back down to cheese prices that are $1.30 or below on the barrel side. So it's really concerning, and we've seen Class 3 futures contracts that are starting to be back at their lows, contract lows that we haven't seen for a while. So what was beginning to look like a better situation for dairy producers with what we saw on the trade side here, it's really been troubling and really set those markets back quite a bit.
Scott, let's talk a little bit as we get into reports this week. Livestock slaughter. Let's start there, and we'll get into some of the other numbers.
Yeah, so I think number one, we can continue to say lots of red meat coming to the marketplace this year. If we look at the beef side, beef production for May was up 6.6% relative to a year ago. When you look at the first 5 months of the year, that leaves beef production 4.4% higher than where we were in 2017. On the hog side, a similar situation. Pork production for May was up 3.7%. That leaves it for the first 5 months of the year up 4.5%. So both of those setting there about 4.5% higher than where we were for the first 5 months of 2017. That's a combination of stronger slaughter weights as well as more slaughter inventory in all those categories. If we look at the cattle side in particular for a minute, beef cow slaughter was up 12.6% for the first 5 months of the year. I think some of the dryness that we saw in some parts of the country has certainly been at play in terms of increased beef cow slaughter, and probably calls into question just where that beef cow herd sits January 1 of 2019.
Let's talk a little bit about the drought situation in some of the areas that were most impacted and how that's going to play out as we get into the cattle on feed numbers as well, but some of those other concerns with beef producers.
Yeah, so it's been a mixed bag. I mean, you certainly can go into Oklahoma and Texas and go, it's bad. Drought that's been ongoing now for several months. You know, we moved calves to feed yards a lot earlier than we would have normally as a result of no wheat pasture, but nothing's really changed to help many parts of that part of the country for a while. You know, I sit here in Missouri, in the northern part of Missouri, southern part of Iowa has been dry for a while. I think that's hurt hay production. Now, I remind folks all the time that we had such a cold spring. I think the combination of a very cold spring and then turn off dry, both those things was what really hurt overall hay supplies and hay cuttings that we've seen. We have seen some rain across some parts of Missouri as we look back here over the last week. We'll need to continue to see rains as we go through the summer, and perhaps we can catch up a little bit. But here are a lot of folks who are saying hay cuttings about 50% of where they were a year ago, and a lot of ponds that are 5 to 10 feet below what they might consider more normal.
Let's get into cold storage and another big set of numbers there and negative implications from that report.
Yeah, so we always talk about we don't want to be backing up meat supplies into freezers. This month we're starting to see some of that, although a little bit of mixed bag. You know, overall I go red meat supplies setting 8.7% in May, above a year ago levels. That corresponds in April we were up 5.4%. So we're growing in terms of those overall red meat supplies. Frankly, we can put a lot of that at the feet of the beef side of this equation, and one might feel that's a little more negative to beef than pork when we look at all these numbers. So beef cold storage stocks in May setting at 13.1% above year ago levels. You just look back in April and we were only up 2.7%. So a little bit of concern there on what's happening in terms of beef freezer stocks. On the pork side, yes, we're 5.7% above a year ago levels in terms of pork stocks. That compares to April where we were up 7.5. So at least the rate of growth starting to slow a little bit. Belly stocks makes up a majority of that, as May was up nearly 94%. Both hams and loin inventories for May was actually below year ago levels. So a little bit of maybe better news when you look at the hog side of the equation.
We know beef and pork supplies are higher. As we take a look at that, is that also part of that trade and supply and demand game that's going on right now?
So maybe to an extent so I'll talk trade side here first. You know, if you think about what we've been doing on the export side in terms of the data we have available to us in terms of what we've been exporting, we've frankly been above year ago levels for the first few months of the year. It's what happens from, you know, this point forward that I think matters on the trade side. So I expect we're going to continue to see more negative news as we start to see additional trade data flow in for especially pork in particular. And so I think that's still yet to come in terms of its full impact for sure, especially if many of these new tariffs we've talked about are in fact implemented. I just remind us back in 2017, we moved a very good amount of product on domestic markets. This year's been fine in terms of domestic demand, but just probably hasn't quite been that same stellar level that we saw in 2017. And I think that has also something to do with just a little bit of increase in those beef stocks in particular, that combined with just overall growth in production.
Anything else on the cold storage side that we need to take a look at or maybe pay attention to this month?
I think those are the big stories. And again, I want to see another report here in another month to see if we're continuing to grow those inventories. That could be some pretty negative news if we continue to see those beef inventories in freezers grow here when we look at the June inventory here in another month.
At 3 months, do we call it a trend?
We very well might start calling it a trend after 3 months, Megan. That's right.
Scott, as we wrap things up this week, let's take a look at that cattle on feed report. Were we surprised to see the numbers that came out today?
Well, I think when you look at cattle placements, they did surprise a lot of analysts in terms of their pre-report guesses. placed on feed in May was up 0.2%, so virtually unchanged from a year ago. Yet when you look at that pre-report estimates that were out there, they range from 93% to 100.8. So we got right near the very upper end of the range of pre-report estimates. So more cattle placed on feed than we would have thought. It just continues to tell us, we got more supplies late in the year than maybe we anticipated earlier. You look at that on feed number for June 1st, and now we've had 2 back-to-back months with the highest on feed inventory since the series began back in 1996. So more cattle that we get to deal with as we move forward.
As we take a look at those numbers, when we break out in those areas, were any specific patterns, or were some areas bigger, some areas smaller? And is that expected with this dry weather that we've been seeing?
Yeah, we can see a little bit of that dry weather, I think, coming through in the numbers. If you look at Kansas and Nebraska, the 2 states that were up the most in terms of cattle on feed as of June 1st, while you see Oklahoma and Texas in particular that were down a lot versus May. So I think those are some of the drought indications that we talked about earlier coming through for Texas and Oklahoma.
Real quickly before we wrap up today, can we talk a little when it comes to like what that means for producers? We know cattle producers need it. We know dairy producers need it. What happens when prices decline? Does that impact the supply and demand aspect of the hay market as well, when we look at like dairy producers that are losing profitability?
Yeah, so if we look at the dairy side in particular for a minute, we're really talking about their dairy quality alfalfa supplies that matter the most. And yes, they've been tighter as well, and we've seen those prices move higher. That certainly is a double whammy when you think about just what's been happening on the milk price side. You couple that with then higher alfalfa prices, and it creates a very difficult environment for a lot of dairy producers across the country. On the hay side, I think one of the things we have to watch very carefully is, are we going to have enough hay supplies in some parts of the country to carry those cows through next winter? I think a lot of folks are very, very quickly starting to look for available hay supplies, trying to get them purchased well in advance of what happens this fall and winter. Now, having said that, we still could have some good hay growth in a lot of parts of the country between now and the end of the growing season. I think we could find some parts of the country that are actually doing okay right now. So I expect some of that hay will move. But if you think about Texas and Oklahoma in particular, a very tough situation already with just how dry it is. Yet if they want to keep some of those cows through the winter, they're going to have to talk about paying more for hay than they have in quite a while.
And it's not just making sure, I would assume quality also comes into play too when you're purchasing it and making that investment.
Absolutely. I'd certainly want to pay very careful attention to what that quality of hay looks like. I've already seen some who are asking, can we release some CRP ground for emergency haying and grazing? And some of that CRP would likely be good for that, but some of it may be a lot lower quality. So you're going to have to look at the quality of those available forages as you go forward as well, and just belling up anything that's available. That strategy needs to be thought through carefully, I think, at this point.
All right, Scott, next week, as we look ahead to reports, what are we watching for and what's on the calendar?
Yeah, so it's hogs' turn next week. Since we got cattle on feed this week, we get hogs and pigs next Thursday, and then we'll wrap the week with USDA announcing June acreage numbers, get a little better shot of corn and soybean acres here in the U.S., and we'll also get a restaurant performance index at the end of the week.
We look forward to chatting with you then. Have a great weekend.
You do the same, Megan.
Thanks, Scott. To have our weekly livestock market update delivered to your email box every Saturday morning, visit our website, go to brownfieldagnews.com. You can click subscribe. You can also submit questions and comments as well. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Megan Grebner on Brownfield.